Hello and welcome to another video on accounting standards. In this one, we are going to look at HKS 2020, which is on government grants. Again, I would like to bring your attention here. This is going to be a summarized version, more specific to the topics or ideas that you should be concerned for exam perspective. Important things to know for exam, but I will drop down a link for the complete standard. It's relatively a small standard, so you may want to read the standard by yourself. You can refer to your learning tags or your notes, but this is going to be a summarized version. So let's get started with on what this video is going to be about within government grants. So the agenda of this video is we are going to look at the scope of HKS 20, meaning what is covered under this standard and what is not covered under the standard. There are two different forms of government help available. There is a government assistance and government grants under this standard, which is HKS 20. So we are going to discuss the difference between both of these two types of government helps that are available. Further, we are going to look at the two different types of grants available. Now there's grant related to assets and then grant related to income. So two different types of grants or grants given for two different purposes. We are going to look at the difference between both of them. And then the recognition criteria for government grants, which will include both government grants related to assets and then government grants related to income. Right. And then finally, we are going to look at the presentation of these grants related to assets and income, meaning how to measure the above in financial statements. That is going to be the idea over. And then of course there are disclosures as always, and you can always read disclosures on by yourself. Disclosures are not that complicated. This topic has been relatively famous, or let's say favorite among the QP examiners these days. So you may want to have a fair idea about what government grants is and how to record for government grants specifically. A lot of government grants have been given during the pandemic, during the COVID time. So it's really reasonable to ask such a question to look at the practical application of this standard. So let's get started with the scope of this standard, meaning what is covered within this standard. This standard is only specifically, you can pause, and if you want to read this, you can read this, but I'm just going to summarize this whole slide here. This standard is only concerned about government grants and government assistance. Basically, when business receives money from government, that's it. So when a company receives the money from government, how do you record it? That's what this standard is about. This standard does not include any special problems in accounting. So for example, if there's an error in recording government grant, you will not apply HKS 28. You will rather be applying HKS 8, which is about changes in accounting policies, accounting estimates, and errors. Because the company made an error in recording the government grant, that would be covered under HKS 8 and not HKS 20. So this is point number A. That's what point number A is talking about. Then we have point number B. Point number B basically talks about if the benefit is available in determining taxable profit. In other words, for example, they have given you examples here. So tax credits, accelerated depreciation allowances. So these are all tax deductible items. So these things are not really government grants because there is a tax implication over there. So therefore, this will not be covered under HKS 28. And then if the government has a participation in the ownership, so for example, if government invests in business through ownership, the money received by the business from the government is not a government grant. So this is not really government grant, because what government is doing is basically buying a stake in the entity. So the money received by the entity is not really a government grant or a government assistance. Government grants covered by HKS 41 agriculture, because this standard stands by itself. So therefore, this will not be covered under HKS 20. So HKS 20 more specifically is when you receive money or help, or let's say help from the government. That's when you will be applying HKS 20. Let's look into the two different types of government help that are available. There's government assistance, and then there's government grant. So let's look at the difference difference between the both. So government assistance is action by government designed to provide an economic benefit. So this is the key word here. So government assistance is about providing economic benefit specific to an entity or range of entities qualifying under certain criteria. So of course, there's going to be a certain criteria. If the business meets that criteria and it's about providing an economic benefit, that's going to be a government assistance. Whereas government grants are transfer of resources to an entity, transfer of resources. So you see, this is talking about transfer of resources. So these are the two keywords that you must pay attention here. Government assistance, government assistance is about economic benefit, and whereas government grants is about transfer of resources. Government is giving you resources instead of providing an economic benefit. So there is a transfer of resources in return for past or future compliance with certain conditions relating to operating activities of the entity, right? So for example, government can give you land for coal mining or give you land for oil rigging. So this would be a transfer of resource. Land is a resource. There's a transfer of resource, right? Whereas government assistance would be about economic benefit. So that's the basic difference between government assistance and government grants. You can pay attention to these key terms here: economic benefit and the transfer of resources. Let's look into the two different types of grants that are available: grants related to assets and then grant related to income. So grant related to assets is when government grants whose primary condition is that an entity qualifying for them should purchase, construct, or otherwise acquire long-term assets. So this is about assets, as the word says, grants related to assets. So basically government gives business money to purchase an asset. So their purpose is already specified in here. That's why I mentioned here, this is very purpose specific. And then of course, you can read this on your own. This is important as well in terms of understanding. Whereas government grants related to income, the business receives income. Business, or you can say business receives cash. And you can the business can decide what to do with the money. So there is not really a purpose specified for the money, but of course it's grant related to income. And we will look at the recognition criteria. It's not that easy. Businesses cannot really use this money for just any purpose. There's of course a recognition criteria, and that's what we are going to look into the next slide. But I hope the basic idea has been explained very well here. The difference between the grants related to assets and grants related to income. So let's look at the recognition criteria for government grants. So government grants, including even non-monetary grants. Non-monetary grants could be, assets or transfer of resources, right? Transfer of resources. These resources could be land or any other asset. So non-monetary grants there would not be cash basically at fair value shall not be recognized. So shall not be recognized until there is a reasonable assurance that the entity will comply with the conditions attaching to them. So of course, grants have conditions. Grants have conditions. It's a contract, and contract never comes without conditions. Contracts always have conditions, and this "and" is important. The grants will be received. So these two things must be satisfied before government grant is recognized. So there are going to be conditions. There are going to be conditions, and it should be reasonably assured that the business is going to meet those grant conditions. Plus, the grant will be received. There is a reasonable assurance that the grant will be received by the government from the government to the business. A government grant is not recognized if these above conditions are not met. So if the above conditions are not met, the company cannot recognize the government grants. And if you cannot recognize the government grant, you probably aren't getting, the business probably isn't getting any government grant as well. So there's kind of logical flow over there. And that's why when I said government grants related to income, if it's pure cash, there's going to be condition on how you can spend that cash. It's not going to be like you can spend that cash anyhow you like. Looking at the presentation, or let's say we can call it measurement on how you are going to recognize government grants related to assets and income in companies financial statements, right? So government grants related to assets, including non-monetary grants at fair value, shall be presented in the statement of financial position. Because it's an asset, it will be in the financial position, right? Assets are reported in balance sheet, and statement of financial position is basically balance sheet. So how companies can do it, they can either set up grant as deferred income, or by deducting the grant and arriving at the carrying amount of the asset. So either you can create a deferred income over there, deferred income, or you can basically deduct the grant from the assets cost. So these are the two methods of presentation in the financial statements of grants. So this is about government grants related to assets. There are two methods, right? You can either use deferred income approach, or you can basically reduce the carrying amount of asset. Then there's one method recognizes as the grant as deferred income that is recognized in profit and loss. So this is basically explaining what I've already explained. So you can pause this and try to absorb the material here. It's relatively simple. Then we have government grants related to income, right? Grants related to income. There's only this method. You can either put it in profit and loss, directly in profit and loss, or either separately with the heading of other income. So you basically, because it's an income, the business just recognizes as income, or alternatively they are deducted in reporting related to expense. So the business can of course go for this approach as well. Really depends. There could be tax implications if you are going for tax planning. You might look at which approach might be more feasible. But as we speak, they have been very clear on this standard that the scope of this standard doesn't have to do much with tax policies there. So it's only about if the business receives government grants, and the standard is only about when the business receives government grant, how will you recognize and measure those government grants? Then the following matters shall be disclosed, right? The accounting policy adopted for government grants. So basically either deferred income or less the government grant from the cost, right? From the cost. The nature and extent of government grants recognized in the financial statement. So you have to disclose the nature and extent of government grants. And then any unfulfilled conditions and other contingencies attaching to government assistance that has been recognized. So, if there are any unfulfilled conditions and other contingencies attaching to government assistance, they should be recognized. They should be disclosed as well. So you can pause this, and disclosures are relatively simple. You can just read, and I think the disclosures are really very self-explanatory. I'm going to put a link down below in the description box where you can find the link to the standard directly. If you want, you can go over the standard by yourself. It's just 11 pages, not that long. So relatively a simple standard. Thank you very much for watching this video. If this video was helpful to you, please give it a thumbs up. You can comment down below on which accounting standards you would like to see videos on. And if this video was helpful to you, please don't forget to subscribe to my channel for more accounting videos like these. Thank you very much.